Hi, welcome to our channel. First of all, please sign up and leave your like. Check out these pitch decks to see how fintech founders are selling their vision and nabbing big bucks in the process. You'll see new financial tech geared at freelancers, fresh twists on digital banking, and innovation aimed at streamlining customer onboarding. The fintech fixing wealth management. Michael Simon launched NDVR in January on the premise that he wanted to build a new kind of investment firm for high-net-worth investors. One that would, according to him, fix wealth management. Simon had been a client of major banks like Goldman Sachs, Morgan Stanley, UBS, and even a robo-advisor. But he felt there wasn't an investment strategy that fit his family planning needs because many of the solutions seemed like one-size-fits-all offerings. So he developed a portfolio management app that customizes portfolios and investment strategies to the needs of wealthy investors. NDVR has attracted big names in the venture capital space as its backers. Karen Pritzker, one of the heirs to the Hyatt fortune, invested through her VC firm, Launch Capital. Polaris Partners led the company's $19 million Series A and Simon and Polaris led NDVR's $20 million Series B, which closed in July. The origins of SecureSave, a Kirkland, Washington-based fintech that works with companies to offer emergency savings accounts, or ESAs, to employees, began with a single email to a Seattle-based venture studio and investor. Co-founders Devin Miller and Bassam Saliba each spent years working in financial technology at companies like TaxAct and Equium. But as the pandemic upended the American economy, they realized their idea to incentivize employee saving was more salient than ever. Miller sent a note to Pioneer Square Labs in Seattle asking if they were still backstopping new companies, even in the midst of what seemed like the end of the world, he told Insider. The venture studio was interested, introduced Miller and Saliba to who would become their third co-founder, the personal finance expert and author Susie Orman, and SecureSave officially launched in September 2020. Miller said SecureSave's business is rooted in a fundamental premise: too few Americans have enough money saved for emergencies. A June Bankrate survey revealed that more than half of adults nationwide are uncomfortable with their level of emergency savings and that only 1 in 4 have more saved for emergencies than they did a year ago. In some ways, emergency savings accounts resemble health savings accounts, through which workers can set aside pre-tax earnings to save for medical care. Those with an employer-sponsored ESA set up regular deductions from their paychecks into a dedicated account for emergency funds, up to certain limits. But the money is deducted after taxes, so funds can be tapped at any time without penalty, unlike retirement accounts, and can be matched by employers. Employers are looking for kind of that silver bullet, something that's easy, that has good impact, is very measurable, and is not too hard to do. It really resonates with employees, and solves very clear problems around loans and financial wellness, Miller said. New twists on digital banking. Consumers are getting used to the idea of branchless banking, a trend that startup digital-only banks like Chime, N26, and Vero have benefited from. The majority of these fintechs target those who are underbanked and rely on usage of their debit cards to make money off interchange. But fellow startup HM Bradley has a different business model. Our thesis going in was that we don't swipe our debit cards all that often, and we don't think the customer base that we're focusing on does either, Zach Brunk, co-founder and CEO of HM Bradley, told Insider. A lot of our customer base uses credit cards on a daily basis. Instead, the startup is aiming to build clientele with stable deposits. As a result, the bank is offering interest rate tiers depending on how much a customer saves of their direct deposit. Notably, the rate tiers are dependent on the percentage of savings, not the net amount. We'll pay you more when you save more of what comes in, Brunk said. We didn't want to segment customers by how much money they had. So it was always going to be about a percentage of income. That was really important to us. Personal finance is only a text away. The COVID-19 pandemic has underscored the growing preference of mobile banking as customers get comfortable managing their finances online. The financial app Albert has seen a similar jump in activity. Currently counting more than 6 million members, deposits in Albert's savings offering doubled from the start of the pandemic in March 2020 to May of this year, from $350 million to $700 million, according to new numbers released by the company. Founded in 2015, Albert offers automated budgeting and savings tools alongside guided investment portfolios. It's looked to differentiate itself through personalized features, like the ability for customers to text human financial experts. Budgeting and saving features are free on Albert. But for more tailored financial advice, customers pay a subscription fee that's a pay-what-you-can model, between $4 and $14 a month. And Albert's now banking on a new tool to bring together its investing, savings, and budgeting tools. Gen Z's finance coach. Jessica Chinrialfi kept hearing the same concern from users during her time at financial technology companies focused on personal finance. I don't know what I'm doing. Whether they were weighing what stocks to pick on Robinhood or attempting to break out of living paycheck to paycheck using Earnin, an earned wage access startup, Chinrialfi found users often struggled to understand how best to save, spend, and invest. In her latest role, Chinrialfi hopes to finally help users overcome their doubts and confusion as the co-founder and CEO of Uprise, a free financial coaching app that aims to bring an offering typically limited to high-net-worth individuals to a wider audience. What we're building at Uprise is really seeing ourselves as democratizing access to private family offices, Chinrialfi told Insider. There's somebody out there keeping an eye out and optimizing your finances. Helping people sleep better at night, that's really the feeling that we're trying to impart. A bank for immigrants. Rohit Mittal remembers the difficulties he faced when he first arrived in the United States a decade ago as a master's student at Columbia University. As an immigrant from India, Mittal had no credit score in the US and had difficulty integrating into the financial system. Mittal even struggled to get approved to rent an apartment and couch-surfed until he found a roommate willing to offer him space in his apartment in the New York neighborhood Morningside Heights. That roommate was Priyank Singh, who would go on to become Mittal's co-founder when the two started Stilt, a financial technology company designed to address the problems Mittal faced when he arrived in the U.S. Stilt, which calls itself a bank for immigrants, does not require a social security number or credit history to access its offerings, including unsecured personal loans. Instead of relying on traditional metrics like a credit score, Stilt uses data such as education and employment to predict an individual's future income stability and cash flow before issuing a loan. Stilt has seen its loan volume grow by 500% in the past 12 months, and the startup has loaned to immigrants from 160 countries since its launch. Hope you enjoyed the video. What is your pitch, Dex? Please comment what do you think about this video.